Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, May the 7th, the year 2018. Let's talk trading. Big. What's big? Why would we want to talk about big? Well, bigger the better, right? Is that always true? Well, it's not true when it comes to losses. That's for the smaller the better, right? You want to avoid them if at all possible, or make sure they're small. And of course, that'll lead into the next money management screen. But before I move on, let's just think about big. I mean, we would love to have that big trade, right? It's kind of like fishing. You want to land the big fish so you can tell the story. But sometimes big and the desire for big may be an indication that you don't want to do the small. It's like hitting a home run. You get up there, you hit the home run, you circle the bases, you touch home plate and you're done. And that's enjoyable. That's preferable. But, hitting those singles, running to first base to beat out the throw, and then maybe trying to steal second. Every pitch you got to be ready to run. I mean, that's work. That expends a lot of energy. It's like trading, All you did was 100 pip trades. I mean, you could just put the trade on, collect your 100 pips, you'd be happy. But, sitting there monitoring that trade, sweating over, do I take 3 pips? Do I take 5? Oh, geez, and that back and forth, that's the work. And, frankly, I love it when the trades move quickly and I can grab a quick 5 or 10 pips, like on NFP day, things like that. I love those days, but the normal days, when you put that trade on and it's just waffling, you're up a pip, you're down a pip, you're up 2, you're down 2, and you're just waiting for that move, and then next thing you know, you're down 5, and you're like, dang it, maybe I should have taken 2. Then it comes back, you're up 2 again, maybe you punch out and it runs 20 pips, and you start screaming at the computer. I mean, I'm pretty sure you've been there at least once or twice, right? See, that's the thing with this big. We want that big, but maybe if we recognize that desire is just maybe our way of not wanting to do all those little things, all those tedious things, spend all that energy. So, we want it big. I mean, all those emails I get showing how you can make these big profits. I mean, think about it. If somebody were marketing, a new indicator or method or book or seminar to you, and they said, hey, you know what? You can make 3 to 5 pips, or I can show you how to make 2 pips. I don't think it would sell. I don't think us humans are wired to go for the small, except for, like I said, losses. But no, we want big. We want bigger. We want biggest. We want those 534% profit returns over the past 30 days. I mean, I'm sure you get those emails. But anyway, that's just something when you're thinking about those big ones, just remember that. But I am going to show you something. The whole reason why I'm talking about big today, in a moment or two. So let's just move on, and remember, we don't want big losses. We want to keep our losses within our risk parameters, certain number of dollars or percent of our account. That's what we're willing to lose, and not a penny more. So just remember to keep that in mind. So on the weekly, we can see the yen. It hit the previous week's midpoint, turned around, and we still have one pair that hasn't filled the gap. I believe when I posted the chart last night, there was a couple down here. what was it? Wasn't it something like the dollar Canadian hadn't filled, if I remember correctly? And you can see here, it looks like it filled the gap and then some. Went up into the wick zone and came back out, the weekly wick zone. So you can see that's what happened. And I think we were looking at the pound franc, and I was saying it looks like it might be a short, but as you can see, it has gone through the previous week's high. So we might want to look for a short coming out of that, or back into the weekly wick zone. It exhausted it. And it would probably be safe to say if it crosses the midpoint between the high and the close here, then you might want to jump in before it actually hits the weekly close here, because around the open it might find support and come back the other way. Just giving you that little heads up. Something to look at. And you can see here on the daily, the yen put in a higher low and turned green, popped through the previous Friday's high here, previous session's high. And that was good for about 12 pips if you took that. So you see, it's 12 pips, a big trade. I'd say that's a nice solid trade. 10 pips. I'd say that's a solid trade. And here you can see the buy zone, what happened. We talked about this yesterday. It came back here. Here you were in the buy zone. There was an opportunity to take some pips there. And right here, you had a re-entry. Here, that wasn't a valid entry. Neither was that, because it was H1 red in the zone. We want H1 green in the zone. And you can see here, we've got a rat zone trade right here live, no hairy hindsight. So you can see here, it says we had a low of 16. That would have been a couple of pips. It's pulled back. But right now, this is where the rats can join in. Right here, you got a rat reversal happening here. A turn trade. See, you had a turn trade there. You had one here. Or you can call these flip-flops, flip-flop, flip-flop. So that would be 1, 2, 3, and now we've got this. And looking at the pivots, we know we filled the pivot, the daily pivot here. We hit the weekly pivot of 109.25, and you can see we're coming back off of that. As soon as so you can see that we got a future pivot point on 1.6995 here. That's on the Euro NAS. But let's look back here at the Euro, at the dollar yen. You can see it hit the weekly pivot. It hit the daily pivot. So once again, those pivots, pretty strong stuff. Here's the monthly pivot here at 108.17. Maybe we will revisit that. We've got what? 4 weeks to do it. It's possible. Very simply, once again, price action. Red at the line, green at the line. I mean, good for what? 3 to 5 pips. Just don't be greedy. That's all I can say is just don't be greedy. Just take it. I mean, yeah, you want the big one, but this is where you can get the small. So maybe right here you went in and you could have had a nice run here. 30 pips. Almost 40 if you caught it here. But that's not how often are you going to get that versus how often you're going to get this. You can see right here. I think they say price will do this about 30% of the time. Price does this about 70% of the time. This being, basically bouncing between a range and then it'll break out. So that's something to consider. And you can see here we've got green candle at the line. Had a red candle at the line, candle at the line, red candle at the line. Do you win them all? No. That's why you have to keep the losses small. Don't let them get big. Wick zone, price does not like staying in the wick zone. And I know I say it every time I put these charts up, but that's trading, repetition. This is something we can exploit to our advantage, making the pips. Because remember, if you put on a trade and that doesn't have a positive expectancy, you're gambling. Because you see, in gambling, for the most part, the house has the odds in their favor. You have a negative expectancy. House has a positive. But in trading, there's certain setups that, if over the long haul, they pretty much have a positive expectancy, even though that's statistically based as opposed to probability based, where statistics deal with past events and probability deals with future events. So you just have to, the math is the same, but you have to make that distinction, because even though statistical, the statistics may be in your favor, the statistical quote unquote odds may be in your favor, things can change, and those statistics will change as things change. So either decreasing or increasing your expectancy. And for those who may not be familiar with the term expectancy, is when you look at your win size versus the number of times you win, and you subtract from that your loss size, the number of times you lose, that gives you your expectancy. And so hopefully that number is greater than 0. Otherwise, if it's not, you're gambling, you're not trading. I think that's a really good definition of trading, because we always have that as trading gambling discussions. And you can see here, looking at the highest open setup right there, boom, that's 15 pips off of that low, but you can see the rest. That was good for about 40 pips to the upside, 40 or almost 50 pips to the upside if you took that trade right there. So there again, could have had one of those nice mega trades, but here, coming back the other way, see, we do this, and we come down here, and see, that was a 19 pip trade. Nothing to sneeze at. That's nice. But if you didn't take it, it took it back, then you had another opportunity. Almost, if you did take it, you may have re-entered here. You took that, say, hey, that candle didn't go into the wick zone, and it was good for maybe another 20 pips. So there was opportunity here and here. This would be for the advanced traders. Beginners, you would have not wanting to chance it. And as you can see, I just flipped the computer on a little while ago. But right here, we have the valley of the ask, and you can see the bid got above it. And right now, you're up a couple of pips. Practically, you'd probably be maybe up a pip, because we've got about a 1 pip spread here. And as you can see, when it was here, you'd be in at about 20 when that bid. So you're up about a pip right now. And what else do we have? You can see here, once again, the peak of the bid and the valley of the ask. You see we've had buying for a while, 278, 79 ticks. And right here, looking at the IRB lines, you can see, once again, hairy hindsight, looking at those profits can be taken using the IRBs. Well, that pretty much sums it up. Traders, remember, big is not always better, especially losses. Don't let that big get the better of you, trying for the big when you just don't want to do the work of the small. Everybody wants to do the big stuff, the cool stuff, the stuff that makes headlines, stuff that wins awards. But you know what? You got to do that day in, day out. It's like exercising. You got to work out every day. So remember, It's not what you trade, it's how you trade it. The Rumple one off to drain the banks.